Well, the leaves are falling in the city of Seattle, but the real estate market is not. So stay tuned. We are going to discuss a real estate monthly market update for the city of Seattle in October 2023. We're going to take a look at the stats. We're going to get you dialed in to what you need to know. Well, hello and welcome back to my channel. My name is Matthew Chapman. I am a local realtor here in the greater city of Seattle, and I specialize in helping savvy sellers who want to sell right, who want to sell smart, as well as working with out-of-towners looking to relocate and buy in this region. And if you are new to my channel, just thank you so much for stopping by. If you could just take a moment and click subscribe down below, that way you're going to get notified of any future content. And if you want to stay up to date on a daily basis, you can subscribe to my Instagram channel at Chapman Homes HQ, and we will get you dialed into even more of what you need to know there. All right, so let's get right to it. So let's get you started on this October 2023 monthly market update. We're going to talk about the city of Seattle, which is made up of over 50 neighborhoods, and we're also going to talk about the east side, which tends to be the suburbs of Seattle. We're looking at Bellevue, Issaquah, Redmond, Kirkland, Bothell, Woodinville, and a few of those outlying areas around there. Really two different markets that require different stats on both markets. So let's get right into it. Let's look at the east side market, which is the suburbs. The month of October, the average median home sales price was $1,427,000, and that is compared to last year at this time of $1,350,000. So on the east side market, we've seen an increase in price by about 6%. So that's good news. The market's trending upward. That's the trajectory we all like to see. And this means that last year at this time, if you actually look at how many of those homes were selling at or above asking, it was roughly 22% were selling at or above asking in 15 days or less. Now, if you look at last month, that's compared to 44% of the homes were actually selling at or above asking in 15 days or less. So that is great news for sellers. For buyers out there, it says that yes, the market is competitive, but it's not ultra competitive. There's still deals to be had for buyers. Also, we're seeing that the month's supply of inventory is 1.6 months supply. It's slightly up from last month, but it's still relatively very low for historical norms. So those are the basic stats for the east side market. Now let's look at the city of Seattle. So getting right to the stats for the city of Seattle, we are seeing the median home sales price for October 2023 was $926,000, and that's compared to last year at this time, a price of $900,000. So in the city of Seattle, we've actually seen an increase of about 3%. So both markets, we're seeing an increase. This is good news. Now, last year at this time, 36% of the homes were selling at or above asking, but just last month, we had 49% of the homes selling at or above asking. So the trajectory is positive for both markets. Seattle has a slightly higher inventory count at 1.9 months supply of inventory. So those are the basic stats, but now let's talk about what is truly happening in the real estate market. I also want to touch on what you need to know as a buyer out there. So let's get right to it. So what we are seeing is a lot of cash buyers in this market who tend not to really care about interest rates all that much. We're seeing a lot of investors take advantage of the market here because what people are banking on is that if interest rates go down, which they are projected, I don't have a crystal ball, but the experts are saying that within the next 2 years, interest rates will go down. And the magic number for buyers to come back to the market in droves is really about 6%. So we're sitting at 7.5% to 8% interest rates right now. They might tick up even a little bit from here, but eventually the experts are saying that they will come down. The magic number is 6%, which is going to create more surplus buyers. And year 2025, the experts are saying that interest rates should be in the 5.5% to 5% range. So I think the investors and the cash buyers are just banking on the fact that, right now it's actually a deal to get a home because if interest rates go down, most likely likely home prices are going to go up in value. And so that is a really great investment with a low risk. There's always a risk, but it seems like a minimal risk to these cash buyers and investors out there. So that's something that is currently happening in this market. And my advice is that if you can afford the monthly payment, this is actually a really good time to buy. You know, nobody has a crystal ball, but I think that the historical trends would tell you that if you're going to hold your real estate for 5 years or longer, and if you can afford the monthly payment, historically speaking, real estate has always been a good investment. And so that's what, if you're going to buy and hold, this is a great time to do it. So what we see happening in the real estate market is that actually prices have gone slightly down for the last 3 months. Now, this is no cause for panic. This is actually very historical norms in this area, and it's a seasonality thing that happens almost every year because the bulk of our appreciation actually comes really starting in January all the way until the end of spring. So for the last 3 months, prices have gone slightly down and interest rates have gone quite a bit up. So actually it's keeping the monthly mortgage payment relatively the same because of the offset there. The other thing that's happening is that new listings taken are down 30% from last year. You might ask yourself, why are people not selling their homes? Well, the simple answer is that they are sitting on 2 and 3% interest rates, and they frankly don't want to give up interest rate to get into another home where they're going to be having a 7.5% to 8% interest rate. That's just not good news for sellers, so they're holding on to their homes. It's also creating this supply and demand issue because there's still not a lot of inventory out there. So the homes that do come on the market tend to sell relatively quickly, even though we don't have the surplus of buyers that we did about a year ago. It's just still such a shortage of inventory that homes are getting sold rather quickly. So now I really want to talk about what you need to know as a buyer out there, or if you're just in the real estate market in general. Number one is that buy downs are happening again. With the seasonality change in the market comes a little bit less competition, which gives way to 2-1 buy downs. And what does that mean? Well, it simply means if your interest rate is 7.5%, the seller can buy down that rate to 5.5%. And on a standard average price home here in this market, that means you would be saving over $1,000 a month on your monthly mortgage payment, or a 2-1 buy down. So people are taking advantage of that as buyers, and they're banking on the fact that interest rates will go below the 6% mark within the next 2 years. The other thing that you need to know is that buyers right now, they're really looking for a quality product that's already been updated. They often don't really want the hassle of having to update the house themselves. And so what we're seeing is the homes that are updated, they are selling quickly, oftentimes in less than 7 days. Now, there's over 60% of the homes in the greater Seattle area that are selling in less than 15 days. So things are still relatively competitive, but we're not seeing the crazy multiple offers where you're having 12, 15 offers. That's very rare right now. What's more common is 1 to 4 offers max on a listing. So that gives you much more power as a buyer. You don't have to give your life away often to get into the dream home that you love. The other thing that you need to know as a buyer is a housing crash is very unlikely. Now, the news media is going to come out in the next several months and probably write some articles about a housing crash, but here's why it's very unlikely to happen. In the year 2008, when we saw that crash, we had historical low equity in our homes. But these days, we've seen a great appreciation over the last few years, and people have tons of equity in their home, and they often put 20% down or 10% down in their mortgage. And those loans that were happening in 2008, you could do 0% down. I know, that's crazy. And so that's why the crash happened. For the majority of the reason, that's the big reason why the crash happened in 2008. And simply put, that's just not what's happening right now. We have a large amount of equity in our home. We have great banking standards right now where people are putting 5, 10, 20% down, even more at times. And so that is just not the recipe for a real estate crash. So what does this mean for you if you're a buyer right now? Well, my advice would be to take a page out of the investors and the cash buyers playbook. And simply put, they are seeing that this is actually a great time to buy because they are predicting that interest rates will go down eventually. And often that means home prices will go up when interest rates are coming down. And they're also thinking, hey, real estate, if you're going to hold it for 5 years, it's always been a good investment. When interest rates go down, it's going to bring more buyers to the table, more competition. So my advice is to conservatively plan that interest rates are going to hover right around 6% within the next 2 years. Experts are saying they're probably going to go to 5 to 5.5 by 2025, but I think it's a conservative play to plan on 6% 6%. So if you base your mortgage payment off 6% instead of the current interest rates, as long as you can afford the monthly payment on your current interest rates, you should be good to go. I think that's a safe play. Yes, there is some level of risk involved in that strategy, but I think it's a minimal risk, especially if you plan on to hold that real estate for 5 years or more. So thank you so much for watching this monthly market update of October 2023. If you are interested in buying or selling or relocating to this region, don't hesitate to reach out. My team and I, we would love to assist you and help you determine your next right thing. So don't hesitate to reach out. I'm Matthew Chapman, and I'll see you next time.